Have you ever pulled up a stock chart and just stared at it? All those lines and bars and colors, it can feel like you're trying to decode some secret message. But what if I told you that's exactly what it is? It's a story, and today we're going to learn how to read it. We're going to turn that confusion into confidence. So, let's jump right in.
You know that old saying, a picture is worth 1,000 words? Well, in the stock market, that's not just a saying, it's a fundamental truth. Think about it. Charts take this massive, overwhelming river of numbers, prices changing every second, and turn it all into a single visual story that our brains can actually process.
So what is that story? When you're looking at a chart, you're not just seeing a line go up or down. No, you're seeing a battle between buyers and sellers. You're seeing hope and fear, greed and panic. It's literally the heartbeat of the market right there on your screen.
Okay, so here's our game plan. We're going to start with the absolute basics, just a picture of the price. Then we'll build on that, getting into the real juicy details with something called a candlestick. We'll even learn how to filter out some of the distracting noise. And finally, we'll cover how to pick the right view for you. Sound good? Let's go.
First things first. Imagine trying to figure out how a stock's been doing by just looking at a giant spreadsheet of numbers. You know, thousands of rows of prices. It would be an absolute nightmare, right? That is the problem that charts were invented to solve. They take that jumble of data and turn it into a clear picture, a story that reveals trends you'd never see otherwise.
So, let's start at square one. Before we get into any of the really fancy stuff, we need to get comfortable with the two most fundamental types of charts. These are the building blocks for everything else, the simple line chart and the slightly more detailed bar chart.
And here it is, the one you've definitely seen a million times, the line chart. It's as simple as it gets. It just takes the closing price of a stock for each day and connects the dots. Its superpower? Showing you the big picture trend. Is it generally going up or down? But that simplicity is also its biggest weakness. It totally leaves out all the drama that happened during the day.
Yeah, seeing the big trend is cool and all, but what if you're curious? What if you want to know just how high the price shot up during the day, or how low it dipped before closing? For that, we're going to need a chart that gives us a little more information. And for that, we turn to the bar chart. You'll often hear it called an OHLC chart. Now, what does that stand for? Open, high, low, and close. It's that simple. Each one of these little vertical bars packs in all four of those key data points for one day, giving you a much better sense of the daily price action and volatility.
So let's just break down the trade-off here. The line chart is awesome for a quick glance at the overall trend, but it hides all that daily volatility. The bar chart, on the other hand, shows you that volatility, but it's still not super intuitive, is it? It's hard to tell at a glance if it was a good day or a bad day. For that, well, we need to add a splash of color.
And that brings us to my personal favorite, the candlestick chart. Seriously, if a bar chart is like watching TV in standard definition, the candlestick chart is like upgrading to a 4K Ultra HD home theater system. It shows the exact same information, the open, high, low, and close, but in a way that is so much more visual and powerful.
I absolutely love this analogy. A candlestick chart really is like a mood meter. In a single glance, you can feel the market's vibe for that day. Was it a day full of optimism where buyers were in control, or was it a day of pessimism where sellers took over? The candles tell you everything.
So let's break one of these down. The thick part in the middle, that's the body. It shows you where the price opened and where it closed. The thin lines sticking out of the top and bottom are called shadows or wicks, and they show you the absolute highest and lowest prices the stock hit that day. See? All four data points, just in a much cooler package.
But here's the real magic, the color. It's so simple, but so powerful. If the body is green, it means the stock closed higher than it opened. A good day, a bullish day. If the body is red, it means the stock closed lower than it opened. A bad day, a bearish day. This color coding makes seeing the market's mood in an instant, well, a piece of cake.
Now, candlestick charts are amazing, but sometimes, let's be honest, they can look a little chaotic. All those jagged up and down moves can make it tough to see the real underlying trend. And that's where our next chart comes in. The Heikin Ashi chart is specifically designed to fix that problem, to smooth out all that noise.
This is honestly the perfect way to think about it. You know how the image stabilization on your phone's camera smooths out your shaky hands? The Heikin Ashi chart does the exact same thing for a stock's price. It uses a special formula to average out the price movements, filtering out the random noise to give you a much clearer picture of the trend.
And reading it couldn't be easier. You see a nice, strong block of green candles? That's a clear uptrend. You see a solid string of red candles? That's a clear downtrend. And if you see a bunch of small, little candles changing colors, that tells you the trend is getting weak or maybe even about to reverse. It's built for clarity.
All right, so we've looked at all these different types of charts. Now let's talk about the rules of the road. The skills you can use to analyze any of them, it doesn't matter which one you're looking at. These are the fundamentals.
No matter what chart you pull up, you always do these things. First, identify the trend. Is it up, down, or just moving sideways? Next, look for support and resistance. Support is like a price floor where buyers keep showing up. Resistance is like a ceiling the price just can't seem to break through. And finally, always look for those huge price spikes or drops that happen around big news events. That's where the real story is.
Okay, so you now have this awesome new toolkit. You can see the market in different ways, from a simple line to a super smooth Heikin Ashi. But the real skill is knowing which tool, which chart, is the right one for what you're trying to accomplish.
Think of this as your cheat sheet. Are you a long-term investor who just wants to see the big picture? A simple line chart is your best friend. Do you need every single data point to be precise? The bar chart has your back. Want to get inside the head of the market and see the daily sentiment? You gotta go with candlesticks. And if you just want to follow the trend and ignore the daily drama, the Heikin Ashi is the tool for you.
And that's it. You've done it. You're no longer just looking at squiggly lines on a screen. You're reading the language of the market. You know how to see the big picture, how to read the daily mood, and even how to smooth out the noise to find the real trend. So the only question left is, what story are you going to read first?